Hello, this is the TradeSite US Stocks and Futures Market Preview and Domestic Economic Data Roadmap for the week beginning Monday, the 28th of October, 2019, ending Friday, November 1st. A lot of important things to discuss this week, even though the market hitting the risk line again, as you can see here, is not the big one. Here's a look at the ES front month futures contract. It's the daily chart of the broad market futures forum. We did hit the risk line again today from the 13 sell signal back in July. Amazing how long that one's been going. I don't think we closed above it, so you'd have to close above it and then take out the high of that candle to break it. However, there's a lot of other things going on that we need to talk about as we wind up October here. We had a good trading day on Friday, a really exceptional one with some huge winners in Tesla and Amazon. It was a mixed week other than that. Still want to see two, maybe three better days a week instead of just one. The week before we had two good days. If you get that, you should be able to be successful in trading. And so we're just starting to see it come back again after a long 6-month period of drought, and that's on this chart right here. You can see it. We're sitting basically exactly where we were back in May. The range has been horrible. It's not like we've gone down and back up or up and back down. It's just not exciting. So let's go through the major daily charts. Then we'll talk about the intra-week action. Then we're going to talk about some weekly and monthly charts. Then we'll go from there. So here's crude oil up 40 cents to 56.63. Still kind of middling for the last. It's basically where it was back in March, right? So it's no big deal. Gold up 2.4 to 1507. S&P cash gains 12.26. Does not close above the risk line there. On the cash index, the Nasdaq 100 up 62.50. That is, I think, close to an all-time closing high. Might be one on the Nasdaq. I'll show you why some of this won't matter. The SOX up 33.16. The biotech's down 5.13. A lot of times you see long patterns like that and you think, oh, look, it's a breakout, right? Like in particular, this S&P here, if it were to break out, that looks super important, right? And NASDAQ breakout, this is a long base breakout. But there's other things that we look at. We'll discuss them in a minute. The VIX, though, down to 1265. Ugh. As low as you've seen the VIX for quite a while. Remember, the lowest it got all last year is down here in that 11 to 12 range. We got 13 buy signals both times. We're not inside of a 13 buy signal here on the VIX, although if you look at the VXX cash index, we do have one. We just closed under the risk line there, so that's going to mean if we get below the low, this is the lowest the VXX has been, right? So if the market's going to roll, it's going to roll. Now, here's the interesting thing. The trend had gotten down. It had been back above one, actually pretty far above one, the 10-day moving average had. Then we lost that one big number. We dropped all the way to a 0.86 10-day moving average. Remember, anything under 0.85 is a sell signal in the broad market. Then we got the one day on Thursday, 1.4, and now we've got a 0.66. So again, we're in really close range to with all the days we've had. I mean, if you count backwards the dots, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. There's a 1.25 number that's about to drop off on Monday, and that will leave 8 out of the last 10 days below 1. That can take that moving average down quickly, so just be aware of that. NASDAQ volume was 1.9 billion shares. That's above the 10-day moving average, but it's horrible compared to the rest of the year. That's our big problem. Volume continues to struggle. A lot of people looking at the impeachment situation, a lot of people looking at China and whether anything's going to happen there, which, newsflash, probably nothing major. And, everybody's stuck. So we can't get anything done, but we did have a couple of great days. Big winners in a couple of stocks on Friday. The prior week we had a good Tuesday and Friday. So if you can continue to have big winners like that, it'll be fine. You just got to make sure that you're trading off winners and losers the rest of the time. Advanced decline ratio on the NASDAQ plus 704. So more stocks were up than down, plus 387 on the New York. Google gains $5.19, trying to bust the risk line from that 13 sell signal. Apple up 3, new closing highs there. Netflix up 5.32. Amazon down 19.45. Remember, gap down quite a bit, actually, like 60 points on the earnings, and then came right back up. So nothing really lost there. Tesla, though, this one, we made a lot of money on this on Friday. After the gap up Thursday on earnings, and there's just been all this crap rumors about Tesla and it going to, 100 or 0, and the numbers caught everybody off guard, and now it's a major short squeeze. And that's what a short squeeze candle looks like, by the way. You had the first day up on the news, a gap up that hurt a lot of people. Some people double down on their shorts, and then the next day you take out the highs of that day, and as they just continue to get squeezed, it gets ugly, and they eventually have to throw in the towel and buy back. So we made some good money there today as well. Facebook up $1.51. Goldman Sachs up $3.18. That still puts it pretty much nowhere for the year, but it is what it is. TLT, the 20-year bond ETF, interestingly enough, just got a 13 buy signal today on Friday. So keep that in mind. The Dow was up 152 points. Now, let's go to some weekly and monthly charts. So here's the weekly chart of the S&P. Remember, there was a 13 buy signal, sell signal on that back in basically in late May, early June. We've been under the risk line there for a while. If I flip to a monthly chart, this is where it gets really interesting. We had that 12 3 months ago, and I said last month if we just got kind of a new closing high, we'd get a 13. We didn't. Just keep in mind, this is what's important here. This monthly candle is going to close on Thursday, on Halloween. If we get a close here or higher, you're going to get a 13 sell signal on the S&P 500. And keep in mind, even though we had one back in 2000 and basically 2016, early in the year, middle of the year, and it blew it off, one of the statistics we know for sure is that usually when you get a 13 signal and then market ignores it, and then you get another one in fairly short order, that one is like a 90% hit ratio. And when you look back on this, keep in mind, going all the way back to 2002, there hasn't been a 13 sell signal on the S&P. So we got the one in 2016, the market shook it off. Now we're going to get this one. And the red static trend line for this takes it all the way back to basically election day 2016, back under 2000. So just keep that in mind because that becomes the target if you get that 13 sell signal. NASDAQ 100, let's switch it first to a weekly chart. Again, there is a 13 sell signal here, just like there was on the S&P. We're still under the risk line. So these weeklies can still be valid and come into play, but now the monthlies are what we're focused on. Now this one needs to go a little bit higher by a few months before it would get the signal, but the S&P is going to get one. And I would also say that the 13s here are not as close, right? You can't see one. It's back in 2013, not 2016. So it may or may not be as meaningful. But I think that S&P one is really important to notice when you look at the stocks. Not so much the monthly chart, but you've got weekly charts of the stocks that have 13 signals. The biotechs have not done anything this year, so they don't matter. The Russell 2000, the small cap index, hasn't done anything this year. There's no signals on those, but the broad market has one on the weekly. It's about to have one on the monthly if we close at a new high on Thursday, and that could be very significant for the months ahead. So just pay attention to that, and then keep in mind that we've got that trend reading getting close again, and the VXX got a 13 buy signal, which is usually good for a downward move in the market. So all these signals are starting to pile up. And so even though we may bust the daily one eventually here, it's a good head fake to break out to new highs for 3 days, make it look like it's a nice 7-month breakout, which usually we'd be all over buying something like that, but not when we're paying attention. If I had a stock that had the secret tool on the monthly that was about to form, I'd be very cautious about taking that trade. It's the same thing on the broad market. All right. In terms of economic data coming out this week, on the week ahead, we've got a lot of U.S. data actually. Monday, the goods trade balance and preliminary wholesale inventories. Tuesday, we've got the S&P Composite Housing Price Index and the CB Consumer Confidence, pending home sales at 10 a.m. Eastern Time. Wednesday, ADP non-farm employment change at 8:15. The first look at GDP for the third quarter, that's a big number at 8:30. Crude oil inventories at 10:30, and then the Fed announcement at 2, the Fed press conference at 2:30. That's Wednesday. Thursday, Challenger job. Personal income and spending at 8:30 a.m. on Thursday. Core PCE price index, employment cost index. Chicago PMI at 9:45. Natty gas at 10:30. And then on Friday, we've got the unemployment rate, which is another big number with the final manufacturing PMI, ISM manufacturing PMI, construction spending, and Ward's total vehicle sales. A lot of stuff this week, Fed announcements and all. And again, remember, Thursday's the end of the month. That gets us our print for the monthly on the Seeker tool. And then next weekend is the time change here in the U.S. Charts, as usual, brought to you by eSignal. If you've not yet taken a trial of our services, feel free to do so. We will help you out for a couple weeks. Have a great trading week.